Hi, this is Rahul Sharma here from JM Financial. Welcome to the October edition of the Horizon Videozine. Well, we have the SEBI regulations firstly, which are more or less in line with the consultation paper. Now, what that means is the index volume could go down by as much as 20%. Now, the hero zero trades, which were becoming a talk of the town, may get impacted. And that should reduce the gambling that was happening, especially by the retail traders in index on expiry days. Now, stock option volumes may increase because it is very difficult to predict what sort of a behavior that traders would adapt. So there is a possibility that traders look for new avenues of trading and may prefer stock options. Now, the possibility is also there that we may have a fortnightly expiry, meaning in week 1 NSE may choose to have a Nifty expiry. In week 2 of a month, NSE may choose to have a Bank Nifty expiry and so on. So that essentially the exchange may be rotating from one index to another based on weeks. Now, negative impact, we feel that hedge funds are the ones which may have a negative impact. Broking houses, especially the discount broking houses, are expected to take a hit and exchanges may see a dip in volumes. Now the market sentiment may not change because these have been proposed to be done in a phased manner. So out of the 6 changes that were there in the document, 3 of them are to be implemented in November and the remaining 3 are to be implemented early next year. So the market will have a lot of time to adjust, course correct and adapt to the new changes. Now having said that, we are also at a very crucial point in time in terms of the global equity market scenario. So it is the geopolitical situation which is turning bad to worse. We have the escalation which is happening between Iran and Israel. And at this point in time, if Israel does retaliate, that would spiral, especially the prices of oil and natural gas on the higher side. Already we've seen spikes happening in natural gas and oil. But if the escalation happens, we feel this is one area which could get impacted. Secondly, the headlines are that the Chinese markets have been extremely buoyant. In fact, in the last 15 odd days, the Chinese indices have been as much as 45% up, delivering one of the biggest rallies of its lifetime. Now, why did this happen in the first place? So there was stimulus from the Chinese government. There was a rate cut by them and that has propelled a lot of speculative activity and a lot of money apparently is moving towards China. So in the last few trading sessions, we've seen negative figures from FIIs in India as well. So in the last 2 sessions, FIIs have sold as much as 15,000 crore worth of equities and this number is expected to increase. So we can very well say that so far we've enjoyed a period of inflows, but we might have a short-term period where money may be flowing out of India and possibly towards the Chinese markets. Now, one thing that can stop this flow of money is the RBI policy. So the RBI policy is scheduled on the 8th of October and there is a possibility that we may have a rate cut. The last time RBI governor had given an update that if they get comfortable with the inflation numbers, there is room for rate cuts. So far, we've had a very strong monsoon. And we also have the festive season which is coming up. So if there is a rate cut which happens in this RBI meet, that should bode well for the equity markets in general. Now, Fed has also started cutting its rate. We saw the first rate cut, the official Fed pivot where they cut rates by 50 bips. Now in the following meets, if they do cut rates aggressively, Powell has already said that they will be going as per the data. But if the data doesn't improve, they might go for another aggressive rate cut. So if that happens, that should also bode well for the equity markets and we should see more money flowing towards the equity universe. Then because of the geopolitical thing, we may have oil prices which can spiral out of control. Earlier when we had the Ukraine-Russia war, it was India chose to import oil from Russia at a discounted rate. It may happen once again if the escalations do happen. Precious metals, especially silver, looks pretty solid given the fantastic rally that we've had in the Chinese markets. Metals have been placed very strongly and that bodes well for silver as well. So technically speaking, silver looks good for a breakout and can very well head towards the 1,20,000 rupee mark in the short to medium term. Now, We also have the earning season, which will get kickstart very soon domestically, and that should give a lot of direction to the market, especially after the recent bout of volatility that we've seen. Now, one thing is for sure that the DIs are sitting on a very big cash reserve of around 1,50,000 crores, which will be deployed at regular intervals as and when the correction happens. So the way we are reading things is the markets may see volatility, but the downside may not be as severe as it has been probably in the past. So in terms of levels, Nifty may look to find support around 25,000, 24,500, and post that we should see some bit of stability emerge in the Nifty. Now, there is one sector which looks pretty solid for the month of October. If you recollect, in September we had the banks do very well. Bank Nifty actually ended up giving a return of around 5% for the month, and it was IT which remained an underperformer. So this month I think that switch hit, or the money will flow towards the IT stocks, and IT index in particular looks good in terms of risk reward. So we've curated a list of stocks from the IT basket or from the IT sector which look good, and we are anticipating an upside of around 15% over the next 3 to 4 months for this basket. So starting with the names, the top 6 stocks technically which are placed well to do from this space are Coforge, looks good for an 15% upside. We have HCL Tech, which can give a 10% upside from current levels. We have Infosys and Emphasis, both of which can deliver a return of 11 to 20% on the upside. And then we have the heavyweight TCS, which can deliver a return of 11%. Well, we also have a dark horse, or a stock which has the highest headroom in this list, which is Wipro, and can pack a punch with a 25% upside potential in the next 3 to 4 months. So this is something that we feel has fantastic risk reward, and especially after the advent of the Fed cutting rates, and these IT companies have more visibility in terms of their planning for the next year. And there are also talks of Infosys, which is the sector leader, delivering growth numbers, especially in this quarterly numbers. So if that happens, we should see the IT sector do well, and even as a defensive, this sector is placed well. So net, we feel October could be a month where we could see turbulence based on what happens with the geopolitical situation, based on what happens in the RBI policy, and based on what happens with the quarterly numbers that are about to be released. So in terms of Nifty levels, we feel this is a good buying opportunity. So take this volatility as an opportunity to invest more, look at areas of the market which have relatively corrected well, and we feel IT, metals, and to a great extent NBFCs are the ones to go for, to play in the coming few months in the markets. So that's it from my side. Thanks so much, and wish you a profitable month ahead.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.